My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. The bears, they just don't get it. They see the world as it is and are realistically upset because there is so much going wrong every day. They see the Fed not letting up in its fight against inflation. They see the earnings disappointing. They marvel at how weak things really are and how a recession is just a hair's breadth away. And then we get an ARM Holdings, today's huge and highly successful IPO. This was a deal that worked well for both sellers and buyers. One that's right smack in the middle of the tech world, including AI, because they're working with market darling Nvidia, and suddenly all is right with the world. So after an uninspiring opening, the averages soar, with the Dow finishing up 331 points, S&P rising 0.84%, Nasdaq gaining 0.81%. Is it really that simple? Yes. Yes, for one reason. See, there's always so much sideline money at all times, waiting to get in, waiting for a signal that things might be better, and after 18 months of no IPOs to speak of, the multi-billion-dollar ARM deal was exactly what they needed. Suddenly, all the sideline money comes pouring back in because the IPO market is a terrific barometer of market health. That wave of new money wasn't something the bears saw coming, and it makes it impossible for them to control the narrative. In short, a fabulous IPO like ARM Holdings blots out the negatives and accentuates the positive. Next thing you know, the whole market has a change of heart, despite the incredibly smart, rational protestations of the myriad bears. Now, does it make sense for the market to work like this? Of course not. It's absurd. ARM by itself doesn't change anything. You and I know that. In terms of facts and figures, it should be meaningless. But psychologically, it damages the bear case in several important ways. And the market runs on psychology, not hardcore, steel-eyed analysis. Let me take you through the bullish green shoots one by one. First, Wall Street doesn't make much news these days, but the ARM deal is big. It's news. And because it was priced deathly with real thought, it didn't pop up huge and then go down. That would have been terrible. Instead, it popped a moderate amount. Good, and then continued to rally. Also good, closing up nearly 25%. A little too high, but I get it. Meaning, even if you bought it at the opening, though, you still made money. A lot of money. That's very important because it reminds people that there are more ways to make money in this market than just riding Magnificent 7 and selling everything else or getting in on the deal itself. You made money if you bought it after it opened. We'll evaluate the ARM deal later in the show, including talk about how much it's worth. But right now, I want to talk about the mistake the bears made today. It's a mistake I made many times when I was younger. They never imagined an event, a seemingly meaningless event, could change things, at least for now, beyond all reason. And that brings me to the second one. During these last 18 months, there have been really almost no IPOs of any significance. Without IPOs, everybody in the investment banking industry, including two Dow components, JP Morgan and Goldman Sachs, was missing out on a major line of business, underwriting. And there was no point in calling up executives of privately held companies and suggesting that they IPO, because nobody wants to try to come public in a frozen IPO market like we had. Today, though, the bankers suddenly have a reason to call companies, and you better believe they're calling. They're saying, look at me and look at ARM. The market's back. That's a powerful, positive phone call to make, an amazing catalyst for the whole industry. I expect to see JP Morgan, Goldman Sachs, and Morgan Stanley stock marching higher from here. The bears didn't have that on their bingo card, and it's going to happen just like that. How do I know this? Well, first of all, I worked at Goldman and did these things. And second, I tapped Goldman to bring a company public during a period when it was bad and then it was good. I know how this game works. Now, lately, we've had horrendous performances from anything in the cell phone and personal computer business, and I don't see that changing. ARM certainly didn't tell us that things are getting better in those key markets, although we always hear hints that the PC's coming back. Hint, hint, hint. But we know that the artificial intelligence thesis, the third positive, is alive and well, which means it's not worth selling anything right now in that industry. In fact, the way I see it, ARM could rally almost 25% today because its partners with Nvidia on their latest and greatest chips, they designed the architecture for Nvidia's new CPU that goes with their graphics cards as part of the super chip platform that Nvidia's put together. That's why Nvidia wanted to buy ARM a few years ago. There was no real overlap, but the regulators, they blocked it anyway. Hey, speaking of AI, one of the most horrible parts of being a bear right now is that you've got a major investment thesis And it's become very, well, let's just say it's hard to shoot down. People thought that the AI boom peaked when Nvidia's stock, though, went down after an amazing quarter. And that made them think maybe it's peaking. Well, no. The unwinding of the AI bull market would have been a great story for them. But after today, I don't think so. Yeah, the bulls can say that as good as ARM is, the CPU, which is what they make, is much smaller part of the super chips than the graphics processor, which is Nvidia. I think if you're a semiconductor analyst, it's an easy call tomorrow to come out and say, did you see how ARM ran? It's time to get back into Nvidia. It's still way down. And there are plenty of other AI plays well off their highs, including some of Nvidia's key partners, that are going to be called on tomorrow to move higher by analysts. Hey, let me give you how about Oracle? It's on the eve of Oracle Cloud World next week with a stock that's well off its high. How about the biggest gaping hole in Broadcom, symbol ABGO, down 50 points from its highs? Those are both inexpensive stocks, and they're intertwined. Hey, how about Adobe, which just reported a solid top and bottom line beat, although the stock didn't get much traction after hours trading because they only guided for inline sales in the current quarter. I remain a believer in this one, though, but it did run up 50 points into this quarter. Boy, Oracle ran up, and so did Broadcom. It's kind of like that. Of course, the positive power of an IPO can't wipe out the risk from an auto strike. We can't tell the outcome yet, but it's just, let's just say it's not going to be positive for the stocks either way, a strike or a big payday. United Parcel, for instance, gave a big payday to its workers, the Teamsters Union, and that crushed their stock. Now, a strike will also crush the earnings of the car companies if it's long. The positive power of ARM can't hide a producer price index number that, like yesterday's CPI number, played right into the hands of the bears. These inflation numbers are just too high. They suggest the Fed has more work to do. There's no denying that that oil's a problem, right? It seems to have no cap. Unless Russia, the Saudis, or even our own domestic producers start pumping more again, then crude could be headed to $100 a barrel, slicing right through 90. Sure, we can ask for fuel costs, but once it gets embedded into the price of everything, then inflation will become more visible and less tolerated by the Fed and by you and by me. Interest rates will stay higher for longer than we expected then. And rates have controlled the story of this market ever since the Fed started tightening anyway. It's why the bears have always seemed to have the upper hand intellectually, from the underinvested hedge funds to the chief strategists who spend all day wringing their hands about a recession, to the billionaires who never happy with stocks, because you only need to get rich once. Bottom line, the bears don't have the upper hand emotionally, at least not today. That belongs to ARM and its tech and financial acolytes. Every now and then, the emotional hand can be as powerful as the intellectual hand. This is one of those times. Let's go to Don in Florida. Don.
Hey, Jim. This is Don, St. Augustine.
Excellent. What's up?
Well, a few months ago, my wife was telling me that she was using a new product with some nice quality and price, which was health beauty products, and she said to look in it. So I did, bought some, and the stock has done very well. And it started to waver a little bit in the last couple of weeks, and I wound up selling half my holdings, and since then it's come down a bit. But insider selling and so forth, I was getting a little nervous with the consumer outlook.
Right, but remember, they also made an acquisition, and I thought the acquisition was a good one, but people get nervous when companies make big acquisitions. I think that's a mistake. I think Elf is good. I think that the company has done incredibly well, but it is up a great deal. So I don't think you were wrong in taking some profits, but let the rest run, please. Paul in South Carolina. Paul.
Booyah, Jim. This is
Booyah,
Paul in
Paul.
Charleston, South Carolina.
I'm glad you called in, Paul. What's happening?
I'm a long-time follower since about 2010. Read all your books, club member.
Thank you.
And, I bought some Pioneer Natural Resources in Devon for the dividend.
Right.
And the price of oil's been going up. Pioneer seems to be responding, but Devon is not. Do you have any insight on that?
Yeah, Devon did not deliver a good quarter. And frankly, that does matter, even if it's an oil company. But by the way, Pioneer delivered an amazing quarter, and I think is still very undervalued. You remember the club, you know that. PXD is the best in show. Right, the bears have plenty of reason to be negative about the actual economy right now, but that's not the stock market. We get an IPO like the one we got today from ARM Holdings. It can go a long way in changing the bears thinking it's out there. Oh, man, money tonight. ARM, the most highly anticipated deal of the year, hit the public markets today. I'm going to break it down, give you all you need to know about the company and how it fits in the technology ecosystem. And not only was I excited about the ARM deal, but so was Wall Street, with the stock finishing the day higher. So is the price right to get in the new name, or is it too late? I'm going to share where I come down. And yesterday, I had the opportunity to cruise around San Francisco in a driverless vehicle with the CEO of GM subsidiary Cruise. And I'm sharing part of one of my interviews with the backseat of an autonomous vehicle in a television first for the company's top brass. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.